What should investors take away, and what should, just ordinary Americans that maybe don't have a skin in the game take away?
So we all know that the monthly jobs report is a volatile series. But the trend, sort of in around 150, 160,000 jobs on average, that is not disturbed. However, what is interesting to note is, Mark pointed this out a few moments ago, is that even though the second quarter in the U.S. is coming in far better than the very soft first quarter, it is still below expectations. So from that perspective, what you have is a continuation of this disconnect between the levels of confidence that we've seen post the election that are still on their highs with the expectation of this acceleration, and what we're actually getting in the data, which is closer to, last quarter was 1.2%, this quarter tracking sort of north of 2%, but perhaps not as strong as the Atlanta Fed believes by their data. So it's a very mixed message, really.
So what is the market saying? Because we had Mohamed El-Erian also saying earlier that this is no longer the so-called Trump trade, it's no longer the reflation trade. We also had David Einhorn on talking about his bubble basket, separate, totally separate theses, obviously, but the market is at a record. What's it saying?
The market is saying that the themes that have worked this year, technology and healthcare, are likely to continue working. Technology is really based on earnings, based on momentum, and there is always an element of that, particularly when the other sectors, such as financials and energy, sectors that we would be more comfortable in seeing a catch-up trade as a ratification of the economy doing better, not working. But it's steady as she goes based on the subdued 10-year yield.